Yo, what's good YouTube? Welcome back to my video. Today I'm going to be talking to you guys about Sndl. So I'm going to be talking to you guys about why the stock is a buy. Currently they have a merger going on, or they're trying to acquire a company. This is probably going to be sending the stock through, and I'm going to be telling you guys the details to it. There's some news in regards to Joe Biden and the Democrats, so that's going to affect the market, the stock price. Also, there's currently some insider buying, so I'm going to go ahead and give you guys the details on that. Then for the people that like technical analysis, I'm going to go ahead and give you guys some technical analysis, so showing you guys the charts and what I'm seeing and how this could affect the stock price. As well, for the people that like option calls, I'm going to show you guys two option calls that I'm planning on purchasing when the market does open. So I am pretty bullish on this stock right now. So to get started, stock's trading at $68.22. I am recording this just a few minutes before 4 in the morning, before pre-market. But before we fully get started, please don't forget to like and subscribe. So in regards to the stock, as you can see here, short-term price prediction is up, up, and up. And the chart events, it says it's a bullish MACD pattern. There's a 1-year estimate of 30 cents, but these are very old. As you can see, they've been there since 2020. So let's get started in regards to the who they're looking to acquire. So Sndl, they currently have a 58.9 million outstanding debt towards Zenabis Global. This is another marijuana company. And what happened was these guys needed a loan to put it towards their company so they could grow, and they put all their facilities and all their assets towards they literally put that all towards the loan. So they secured it towards the loan, and they were having issues paying it, and they always had to renegotiate with their lenders, saying if we could have more time or giving them an X amount of dollars rather than the full payment. So this kind of got really frustrating to the lenders. So what happened? Sndl went ahead and bought out the debt. So they went to the lender and they said, hey, I know you guys have issues, we could buy out this debt for you guys, and that way you don't have to worry about it. So Sndl owns the debt, and Zenabis has to pay Sndl now. And basically what's happening is they owe $58.9 million, and they are paying at a 14% interest rate. So Sndl is receiving from 14% in interest every single year because of the debt. And on top of that, they get 3.5% royalty. And these guys, Sndl, are not willing to negotiate. They refuse to negotiate because what they're trying to do is they're trying to force Zenabis to default so they could get their whole company. Because right now the company is worth less than 58 million. So if you see here the market cap, they're actually worth 54 million. So they're worth less than the whole company itself. So they're going to be forced to default, and then Sndl could fully take over the company, take all their products, their everything pretty much. And that's going to be a bonus for Sndl because there's now less competitors, and they could go ahead and acquire the company, and the stock price will definitely be going up with that news. And if Sndl somehow still manages to pay it, they are really low in cash. They still have to give 3.5% of all sales. It's not even profit, all sales to Sndl. So Sndl is guaranteed to make money. But right now, what's going on is there's trying to be a takeover, and Sndl is saying that, hey, Zenabis paid us late, and they're saying that they paid us the $7 million in Canadian, so 5.5 million in US. They said that they paid it late, so they're trying to take over the company and say they defaulted on their payment. But Zenabis is saying no, they're disputing that, and they're saying we did not default, we paid in time, while they're saying no, you guys paid late. So what's going to happen is they're going to go to court. Either Sndl wins and takes profit and takes over the company, stock price is going to shoot up, or two, they prove that they did pay it on time. And what's going to happen is now Zenabis is going to be having to sell all their products extremely cheap, like cents on the dollar, and pay a 3.5% royalty. Plus, they're going to have to burn down their business, and it's going to be really hard for them to grow because now they know they can't mess up. they know one little mess up and they're done as a company. So regardless, SNDL kind of has them by the balls. So that's why regardless of what happens, it's still a positive for SNDL. In regards to the news, basically what's happening is that Joe Biden and Kamala Harris, they basically are vowing that they're gonna be ahead and decriminalizing the pot, and their goal is to make sure that they could go through, and because they have more seats in the Senate, they actually could make a vote, and no matter what happens, they have control. So let's say, for example, it is a 50-50 vote. Kamala Harris actually is able to break the tiebreaker. According to the rules, she has the last vote to break it during a tie. So this is definitely good, and what they're starting to do is they're going to go state by state to legalize it before they do it federally, because it'll be a little bit harder to do it federally and that will take more time. And right now New York is planning on decriminalizing it and making it available for recreation. As I mentioned, on a 50-50 split, the vice president gets to decide the vote. And more news in regards to that, Biden is looking to get him, so Merrick Garland, as the Attorney General. And he is going to be the opposite of what Trump was doing against the anti-cannabis. This isn't 100% confirmed because he still needs to be put in, but also they're saying that there's a possibility that he might not actually be for it, but because of Biden and his goals, I'm pretty sure that Merrick Garland would be in support for it, or at least he'll be a little bit less strict on it. So in regards to the insider buying, we have here the CEO has bought some shares. He bought $90,000 worth of shares at 47 cents. He bought another 90,000 at 47 cents. There was a sell-off at 500,000 in volume, but this is restricted shares. So what I'm thinking might be is he might have transferred his shares from within his company over to maybe like a retirement account, or he might have done something with it. We don't know the details of it yet, but this was done as of January 6th. And he went ahead and bought more shares, so I don't think he would have sold it for no reason, just to buy back. So as you can see, he went ahead and bought more shares, he bought more shares again, and he bought more shares again, all within 48 shares. And he got a payout of 6 million in shares, and this is equal to over $4 million on the 8th. So on Friday after market, it was trading for a minimum 68 cents, so he would have gotten it for about 68 or 69 or even 70 cents, so he would have gotten it around that range. So as long as he doesn't sell, the market estimate should be, this market sentiment should be that this is a positive thing and the stock price will start going up because of it. So this is something you definitely want to keep an eye out on. Now let's go to the technical analysis. If we go to the daily chart, as you can see here, there is in the MACDs, there's the red and a lower red. So, but if you look at the price, there was a higher low. So the low was here and it became a higher low, and currently right now it's still trading at 68 cents pre-market. So this is a good sign. Plus there is a buy signal right here where the blue crossed over the red. So as you can see, it's starting to become green and there's going to be a buy signal. There is currently a resistance at 70 cents. So if that can break that 70 cents, the next resistance should be somewhere along here, that $1.07 range, or you might get one in the 93 range. Currently right now, how I'm trading this is, if you buy at 68 cents, I'm putting a stop loss right here at the 200 SMA, so at the 53 cents. So it's about a 16-cent difference. So what I'm looking to do is get at least 1.5 or 2 risk to rate ratio. So what that means is basically for every dollar I'm risking, I want to get a return of 1.5 or 2. This means that I would have to sell at about 92 cents or $1. So once I see it hits 92 cents, I'm probably going to start looking at taking money off the table. If I could take money off the table, I will. If I see that the stock is still rising and the MACD signals look good, then I'm probably going to keep it and ride the wave to $1. And basically what I'm hoping for is that we could get, hold on. What I'm hoping for is that we could get a U shape right here, bounces to the 92, and then pulls back a little bit so it could perform a cup and handle and take off. That's what I'm looking for. So basically, if you guys don't know what a cup and handle is, it's basically when it looks like a cup and then it looks like a little handle and then it takes off. Whenever you see cup and handle, that's a usually good sign to start buying. Now in regards to the options, what I'm looking to get is the 19th of February call. I like to purchase things a little bit like at least a month away, just so I'm on the safe side in case this goes wrong. At least I have some time decay on my side. Or at least I can hold on to the option a little bit so it bounces as long as it's going to hit my stop loss. So I'm looking at the 50-cent call option or the dollar stock option. And I just put something very conservative because I'm probably going to buy this just in stocks and not options. Or if I do options, I'm only going to put like $1,200, nothing more. But if it does hit that 90-cent mark, you could get about a 64 to a 96% return. So you can almost double your money. And same thing here. I don't think you'll probably hit maybe like a couple days later. So about a 61 to a 94% return as well here. So this is a pretty good risk to ratio, and I would sell at 57. So a 55 or 57-ish, I'd be risking about 40% to gain about almost double my money, which is pretty good, at least 77%, which is a pretty good risk to rate return. But that's why I'm only risking $1,200. So 40% of that, I'd still be keeping most of it, but it's a very small risk, but with a little bit higher return. And that's pretty much it for this video. I'm pretty, look at this. So pre-market, yeah, it's going up to 73, so it already broke the resistance. If the stock does bounce down a little bit in the 60s, I would definitely, in the high 69s or low 70s, I would definitely buy. But just also keep in mind in regards to the volume. So the volume, it has to hit over this volume to be a good buy. If you guys do have any questions or concerns, or want me to do another stock video, please let me know. Stock of your choice and I'll definitely do it. And just don't forget to like and subscribe.